Okay, we are now live. Hello everyone and welcome to today's live stream. Okay, I think we can now start the stream. So today I've not taken any trades on the intraday strategy, but I actually do have two open positions on USD CHF and AUD-USD. These are both swing entries, but as I can see here with USD CHF, I'm actually about to get tagged out, but I'm going to break down the reasons for taking this trade. And I hope the sound is clear. Okay, so actually took these trades during the London session. These were entries just before the start of the London session at 7 a.m. Now, the reason for taking this trade on USD CHF is because I was looking for short positions after we had a market that has been trending well for quite a while. It's been trending upwards. And if you've seen my previous live streams, then you know that what I like to look for is reversals after a market has trended for quite a while. And we've gotten signs that in this instance, since it's an uptrend, that the buying pressure is about to end. So normally, the price will trend upwards, getting higher highs, higher lows, higher highs, higher lows, until you get to a point where now we get to a situation where every time we break the high like this, we retrace, we break the high again, we retrace, we break the high again, we retrace, we break the high again, we retrace, then most likely we get a reversal. Now, every time we get in this situation where we are breaking the highs and getting immediate retrace, just means that at this point we are now starting to get selling pressure in the market. And it's just about the buying pressure, and where there is no sustained buying pressure to continue pushing prices higher for quite a while. Because when the market is trending, you can see that you have a sort of a long, fast, impulsive push. You get a correction, then we cover quite a distance with the next leg, impulsive leg. You get a correction, and so on and so forth. But at the top of an uptrend, we usually get something like this, where every time we are breaking the high, we are retracing immediately. Breaking the high, we are retracing immediately, meaning that we are getting sellers at these levels. And whenever you get such a market like this, we are more likely than not to get a reversal. And I was now and in this instance with this particular market, you can see the uptrend. Now, in case you can't see the uptrend using in case you can't see market structure clearly using the candlesticks, you can use the line chart. So you can see here, for example, let me just switch to the line chart, and you can see clearly what I'm talking about. So we have an uptrend, we get a pullback, we can get continuation of the momentum, we get a deeper pullback, we get continuation of momentum. Now you notice we are getting every time we are pushing upwards quite a distance. With this first push, we had quite a distance. We get a small correction. We get another impulsive leg with covering such a huge distance. We get small correction, then we get another impulsive leg pushing prices higher. But notice what's happening at the top here. Now we are getting in that situation where we are breaking the high, retrace, break the high, retrace, break the high, retrace, break the high, retrace, break the high, retrace, and we've gotten the sell off. Now you can see that you can draw two parallel lines at the top here to get the tops and at the bottom, and this is what I refer to as an ascending channel or ascending nature, because I do not trade the patterns themselves. I trade the underlying buying and selling pressure behind the patterns, or the underlying price action behind the patterns. So let me just go to the candlestick chart. Now once we got this squeeze at the top with an ascending nature or an ascending channel, for me I was now waiting for reversals, and we did get the reversals during the later stages of the New York session yesterday, and we got the entry trigger today in the morning at 7 a.m. Now this is based on London time. Now this was around 9 a.m. Kenyan time. So I took this entry on USD CHF, and I've also taken I also took a trade on Audi USD, which was the inverse of this, because I took a buy on Audi USD. Now when you can see that with the Audi USD you get an inverse of what's happening on the USD CHF. I normally say that price action on the DXY or on the dollar index is going to determine a lot what's happening on the dollar denominated pairs, and you normally see the pairs moving in sync. Now in this instance we had a market that was trending downwards for quite a while, for the past 2 weeks, and when you look at this and you look at the USD CHF, you just realize that you have an inverse in price action, because you can see we've had a market that had been trending lower, and then at the bottom here we got a descending channel. Now let me just switch to the line chart. You can see clearly the descending channel I'm talking about here. You can draw the parallel lines. You can draw a trend line. If you were to draw a trend line, it will be touching the bottom of these lows, and at the top there, like that, you get this descending channel or descending nature, where every time we are breaking the low we are getting buyers, we're breaking the low we are getting buyers, we're breaking the low we are getting buyers. When you get this sort of price action, it just means that the selling pressure is more likely about to get exhausted. And once we got the impulsive push, I was waiting for my entry trigger. Now for this particular instance, I took the trade a little bit late, because the setup was at 3 a.m. which was around 5 a.m. Kenyan time, and I was still asleep. Now when I woke up, I could see that the price was still hovering around my entry area. So because I had missed this trade, I got the chance to take the trade a little bit lower, just at the start of this candle over here. So my entry was supposed to be at this level, but I was just entered a few pips below, and even if I had entered earlier, I would still be in the trade even if price pushed a little bit lower, because my stop was 17 pips. So in case I took the trade here, 17 pips, even 16, you can see the low did not take me out, will not have taken me out. Now I'm anticipating to see if price can continue pushing higher. If we break this high, at this point in time, this is my high, this is my low, and I've reached 1% on both trades, so I do have a total of 2% exposure. And the correlation between the pairs means that more likely than not, if one trade ends up being a loss and we get a reversal, then we are going to get a loss on both trades. And this is why it is important to be careful of correlation when you're placing trades. For me personally, I do not want to have more than 2 open trades on one on one particular on one particular currency. So for example, we have Audi USD and USD CHF, both have exposure to the USD. Now I have 2% risk on these trades, with 1% on AUD/USD and 1% on USD CHF. Now with AUD/USD, I'm still above break even. Price is still above break even. You have not yet gotten into drawdown. But with USD CHF, we are clearly in drawdown, and we are still a few pips away from getting tagged out. And I might have to hold this trade over the weekend depending on how it's going to play out. If we continue pushing lower, so this is my high for this instance and this is my low. I've not gotten any opportunity to manage the trade and move my stop loss. I'll move the stop once we break this low. Now these are entries on the 1 hour time frame, which is the time frame I use for my swing strategy approach. And it's been a while since I got an entry on this swing approach. I think these are the first trades over the last 2 months or 1.5 months. Now hopefully we get a win, because when we get such entries, we really have a very good opportunity to get very high risk to reward trades, because we have all this gap that we can fill. It's all about how I'm going to manage the trade as price pushes lower. That is if I'm not tagged out of the trade for 1% loss. Have you guys taken any trades today? Yesterday I took one trade on crude oil during the New York session live stream, and it ended up being a loss, 1% loss, which is completely fine. Now these particular trades might take a while to play out, so right now I want to go and focus on the intraday strategy, what I'll be looking for during this particular New York session. Now since I have already 2 open trades, I don't want to have so much risk at a single point in time. So today if I do take a trade, I'll only take 1 trade. So for the intraday, today I'm actually looking for entries on the opportunities on yen pairs. I do not see any other opportunities on the indices and commodities. They are still in a sort of a range-bound messy price action. But with the JPY pairs, we also in some sort of a consolidation. But we can't break. If we break out outside of this consolidation at the top here, you can see also that this is a market that has trended, although it has not trended for quite a while. But on the intraday strategy, I like to look at what's been happening as from around 8 p.m. the previous day throughout, and what's been going on throughout the Asian session. And for now we are in the New York session, and when I woke up in the morning during the London session, there were no opportunities on the intraday strategy or on the 5-minute chart. I use the 5-minute chart for my entries on the intraday, and all my analysis is based on purely price action, and I do not need to, for this instance when I'm doing the intraday approach, I just base all my analysis on the 5-minute chart. I do not need to do multi-time frame analysis, like starting from the daily, going down to the 4 hour to the 1 hour to get levels. For me, I'm all about looking for imbalances in buying and selling pressure during that particular time frame. And we know that markets move in cycles. From uptrends, we get range from an uptrend into a distribution, which is some sort of a consolidation. Then we get a downtrend. At the end of the downtrend, we may get an descending channel or another accumulation, which is usually an accumulation, before we start another uptrend. And that's how markets moves, whichever time frame you're looking at. So for me, I'm looking for entries on the uptrend and on the downtrend. And that because that's when you have an imbalance in buying and selling pressure. whenever we have a balance between the buyers and the sellers, you get a situation where market is moving sideways like this. So in this instance, we can say that at this point in time, the sellers and the buyers are in equal measure. They sort of have an agreement around the price. But in case we get an imbalance, in case you have more buyers than sellers in the market, then price will push outside of this consolidation, and we'll be looking to see if we can get continuation entries depending on how we break outside of the consolidation. If we break outside of the consolidation impulsively, then it's very possible that we might get continuation entries to the upside. And if sellers take control of the market, then we're going to get market breaking out of this consolidation, and we'll be looking for pullback entries to take prices lower. Now, the most ideal scenario in this case will be if we get a sell-off, because this price has trended for quite a while, and whenever we get a market that has been pushing upwards like this, and then we get this sort of an consolidation at the top or a range, this is often what we'll refer to as distribution. Now, this is based on the Wyckoff's principles, which I've done a video on. Now, whenever you get a distribution like this after an uptrend, it's a sign that you might get reversal in price. It's all about waiting to see if all the buying pressure is going to get exhausted. Now, on AUDJPY, you can see it's similar price action, which is what I've just been talking about when I say that we normally get very similar price action with currencies that share the same particular currency. So for all these pairs, you'll realize that they're just in some sort of a consolidation. Now, just like in EURJPY, I'll also be looking to see how we break outside of the consolidation. If we break to the downside with a lot of strength, I'll be looking to short the market during the first pullback. And if we break to the upside, I'll also be looking to see if I can take continuation entries. If we break impulsively, I'm looking for the pullback to go long. So we have two scenarios, or two probable scenarios for taking entries on these particular pairs. And see, we have very similar price action on New Zealand JPY. So it's all about waiting for price to break outside of this consolidation. Hopefully we can get the entries during this live stream. Now for the GBP JPY pound yen, we also had almost very similar price action, but during the London session we had this sell-off, but we've now gotten some sort of a consolidation. So for pound JPY, we have a smaller consolidation to worry about. Now, we have gotten the break, but this is not a strong impulsive break to look for continuation entries. As I've said, I want to see a lot of strength in the selling pressure as we break outside. Now, how do you know we have strong selling pressure? It's by looking at the size of the candles. If the size of these candles were bigger than these candles inside this particular consolidation area, then that is what we can consider an impulsive push outside of this range. You can see here the size of these candles. These are very impulsive candles, but they don't necessarily have to be this big, but at least like this candle. This is an impulsive candle. If you can get selling pressure with this size of candles, then I'll be looking for pullback entries to short the market. But for now, we have to wait and see how we are going to break outside of these consolidation areas. These are the only entries I'm looking for today. So for now, let's have a quick look and see if I've been tagged out of the USD trades. So I'm just about to get, I'm surviving by just a few pips on this particular order. Yeah, I'm still in the trade. Yo, what's up, Mash? Nice to see you again on the live stream. Now I started, my main strategy when I started, I focused only on the 1 hour strategy. But after a while, it's only this year that I've shifted to the intraday strategy. Because with the swing strategy, especially with the market conditions that we have nowadays, it was very slow and we were rarely getting opportunities to trade. Like this, as I've said, I've only taken maybe, these are the first 2 trades in like 1.5 months of 2 months on the swing approach. But I have taken trades on the intraday strategy. Some I've taken on the live streams. But yesterday we took a loss on crude oil. What trade am I in? Short on USD CHF. Got entered at this level over here. The stop at 0.79790. This is a swing approach entry. And I also took another trade on Audi USD. I got in a little bit late, but I was still able to, price was still around my entry area. So I've taken this trade on Audi USD at 0.70282, or is it, yeah? My stop is at 0.70112. Risked 1% on each trade. So I have a max exposure of 2% for today, and I might have to hold these trades over the weekend. Now, I've not gotten the opportunity to manage the trade to at least move my stops, to even break even or reduce my risk exposure. What I'm waiting for is for price to break this high. This is the low. So actually I have 2 open trades at the moment. On the intraday, as I've said, I've not taken any trades, but for today I have the yen pairs on watch. They're still in some sort of a consolidation. So for the intraday, I'm waiting to see if we can break outside of this consolidation here at the top. It will be ideal if we can break lower, but also if we break and we get impulsive push to the upside, I'm also looking for longs, as long as we get outside of this consolidation. My best trades usually happen whenever we get a consolidation and then we get an impulsive push outside of the consolidation on either side of the market. But in this instance, I prefer taking shorts because it will align with the Wyckoff's principles, where once the market has trended upwards, you get a distribution, then you get a reversal. Now this applies to all the yen pairs because we get similar price action on the yen, on the pairs that share their single currency. So Audi JPY, Euro JPY, New Zealand JPY. You can see we're just moving sideways. So we are waiting for price to break outside of this consolidation. Then we can take pullback entries to take it lower. But if we break outside impulsively, I'll also look to take longs. but we have to get the setups within the first 2 hours of this New York session. I prefer to place my trades within the first, is it 2 hours? Yeah, between 1 and 3 p.m., between 1 and 4 London time. So 3 hours. I have to get the trades within the first 3 hours of the New York session. After that, I don't take any trades. My trading day ends at 4 p.m. London time or 6 p.m. Kenyan time. Are you also looking for entries on yen pairs? So for now, let's see if I've been tagged out of the AUDUSD trade. No, the USD CHF was the one where I was very close to getting tagged out. Let me just confirm from my broker's end. Still in the trade. Sometimes price action lags a little. You might end up getting tagged out of the trade, but it does not reflect on the charts. But I'm glad my broker is at least very good with the spreads. And though price has approached my entry, I've not been tagged out. With AUDUSD, we still have some distance even before we get tagged out. Now, I still have full risk on both trades. I'm waiting to see if we can break this high, then I can move my stop to break even. On AUDUSD, if we break this low, depends on how price action will develop around this area, if I can move my stop to break even. Yeah, sure. Which broker am I using? I'm using Blueberry. You can see the link in the description box. Or should I send you a link? Yeah, the best trades do happen after a consolidation, and we get a break outside of that consolidation on either side of the market, because that is an indication that we now have an imbalance in buying and selling pressure, and it's better to go, and we can now get into a trending market. Now, I am more of a trend following trader. I guess you're also a trend following trader based on the trades that you take. But let me send you the link. it is a properly regulated broker. It's actually regulated by the Australian is it, I don't know, this is the Capital Markets Authority in Australia or something like that, but they are regulated. Yeah, trend following approach is a tried and tested way of looking at the markets and trading the markets from way back. If you read the stories maybe on Market Wizards, have you ever read the Market Wizards book? Or just listen to any story from traders who have traded for quite a while, you realize that most of them are just trend following traders. Now, obviously, the markets have changed over time, and it's very difficult to get trends nowadays. But when you do get an entry in a trending market, you're more likely than not to get a high risk to reward. But I noticed that this trend following approach has a low win rate. What is your win rate by the way? So I'm currently, for those joining, I'm currently in on 2 entries on Audi USD and USD CHF, but these are swing strategy trades. I took these trades just before the London session. For the intraday strategy, then I'm waiting to see if you can get breakouts on yen pairs. The yen pairs can break out of the consolidation they are in. I'm going to see if I can get, but because I have 2 open positions, I'm only looking for maximum 1 trade. I don't want to have too much risk exposure at this point in time. At max, I can have 3%. And it's only because the other 2 trades are swing trades. If the other trades were intraday trades, I will not be looking to take any more entries. Capital, it's all about capital preservation. Yeah, Market Wizard is a book. My win rate is around between 30 and 35%. But I do have a high risk to reward. So how long have you been trading? Yeah, Trading in the Zone by Mark Douglas, a very good book on psychology. It is actually the recommended book for trading psychology. And also, if you're also looking to read more books on trading psychology, there's let me remember this book. The mental game of poker. Let me just confirm. The Mental Game of Poker is a very, very good book on trading psychology and how to deal with losses. Although it is a book meant for poker players, the concepts are the same. Trading and playing poker are very, very similar. me just confirm the name of that book. Yeah, the thing about poker and trading is what makes it similar is the fact that it's all about managing your emotions and your mind, and the risk to reward management of a risk to reward. Because when we do a technical analysis and then we take trades, sometimes it's very easy to think that the technical analysis you're doing is going to determine the outcome of the trade, but it's not. Anything can happen after you've done all the analysis. A big buyer might just enter the market and completely nullify the analysis you've been doing. So, and you also notice that we have so many different ways of trading the markets, yet you have people making profits consistently from the different styles, as long as you've mastered the particular technical analysis of that trade or that particular system, and then you know how to manage your risk. Then it comes down to your performance as a trader in the markets, and that's where the mental game of poker that really helps. Reading that book, the concepts in that book are amazing for new traders. Okay, let me check the trades. I'm still in on the AUD/USD trade. The USD CHF, still in the trade, but I'm still in drawdown on USD CHF. Nothing much has happened. We're waiting to see if we can, hopefully can get a strong selling candle and we come and break this low. Yomash, how did you learn how to trade? Like, where did you get the basics? Have you been in a community before or something? they're shifting, having to different approaches to trading can be challenging, especially if you're starting out. Like right now I have two, the swing strategy and the intraday, but the good thing is that the technical analysis is the same on both strategies. It's just the time frame and the execution, executing on different time frames. And with the swing approach, I rarely get trades. I rarely get to place trade, especially in the markets that we have nowadays. So I can afford to have an intraday strategy and a swing strategy. Hopefully this is the candle where we break the high, this 1 hour candle. Now trading on the swing approach is very, very comfortable because you only get to look at the markets maybe once or twice in a day. With the intraday, you have to be a little bit more, I would say, focused. Doesn't mean that I have to stare at the screen the whole day, but I do have to check in maybe after every 1 hour, 30 minutes, depending on the price action I'm seeing. For example, you can see right now on the on the yen pairs, I'm waiting to see if we can break outside of the consolidation. Now, I do not need to sit down and stare at the charts waiting for it to break out of the consolidation. I can step outside, do other things, wait for price to break out of the consolidation, maybe check back after 30 minutes, after every 30 minutes to see, or after every 15 minutes. But whenever we have this consolidation, maybe it will take 30 minutes because I will first of all need like 3 impulsive candles breaking, 2 or 3 impulsive candles breaking out of the consolidation. That will be 15 minutes. And then I'll need another around 4 or 5 candles for the pullback to get my entry trigger. So it's 30 minutes. So I can afford to step away from 30 minutes, to step away from the charts for 30 minutes without missing the trade. Now I don't do top. Why don't you do top down? I don't do top down analysis because the markets move in cycles, and you can get these cycles on the 5-minute chart and on the 1 hour chart, on the 4 hour chart. In every time frame you're going to choose, you'll get. Let me just give you an example. In every time frame you use, you're going to get instances where you get on a market that is trending. Then we get some sort of a consolidation. Then we get a reversal most of the time. Or alternatively, we might be trending lower. We get a consolidation before we get continuation of momentum to the upside. Now, these cycles play out in every time frame. Now, when I look at the 5-minute or the 1 hour chart, you can see the cycle playing out. We had the downtrend, we got this descending nature, and we get a reversal. Now from this particular time frame and this particular chart, I don't need to go and look at what's happening on the 1 hour time frame or on what's happening in the daily and look at the levels. For me, I'm basically trading the imbalancing buying and selling pressure. And you can see the imbalance in the buying and selling pressure just by sticking on one particular time frame. Like you can see there, my analysis on this 1 hour time frame is based purely on this 1 hour time frame. This does not affect my analysis that I'll do on the 5-minute time frame. Because let me give you an example. We've had this downtrending market. You can see this cycle on the 1 hour time frame. Let me go to the 5-minute chart just to give you an idea that you're going to get cycles in any time frame. Let's even just use this very randomly as an example. You get an impulse, you get a market that is correcting or in a consolidation at the top, then you get a downtrend. So if I was looking for opportunities, I've been looking for opportunities during this uptrend or during the downtrend. So I don't have to do top-down analysis. Now, when I first started out, I got introduced to pattern trading, sort of pattern recognition trading. And in that instance, I used to do the multiple time frame analysis or top-down analysis that you're talking about. But since I shifted to the 1 hour time frame, this was a different approach from a different community. Now I got to understand that I only need to look at the 1 hour time frame and look for imbalances in buying and selling pressure through by just trying to observe how price develops. After we get a downtrend, what do we get? If we get such price action, then I look for reversals to see if I can get the start of a new trend and get in on the first impulsive push. Then when I get a pullback, I take the entry. Now, if you've seen my video on markets on the Wyckoff cycles, I've done a video on the Wyckoff principle and my trading strategy, giving you a breakdown of how I analyze the markets. You'll be able to have a better understanding of the strategy or my approach. I can also recommend one book for you that will really help you with technical analysis and price action. It's called The Art and Science of Technical Analysis. It's actually called The Art and Science of Technical Analysis. It's by Adam Grimes. Yeah, go watch it, and also go and you can find that book that I've just told you about. Let's see if we've gotten any movement in the yen pairs. Now it's still inside the range area. We are pushing higher. Now, whenever price is inside of the range, it's not ideal to get involved because it's very easy to get tagged in and out. Until we break outside of the range, that's when I can now look to get involved. Yeah, for the yen pairs, they still need a little bit of time. as I say, if you're joining the stream, then I'm currently in on AUD/USD and USD/CHF, looking to see if you can take prices higher. And in this instance, these are trades that I might have to hold over the weekend, which is something I'm a little bit worried because of the current political climate that we have in terms of the war. Whenever during these times when we've had the war in Iran, whenever we get news coming out during the weekend, we might get huge gaps in the market during the open, and that's what I am a little bit wary of when it comes to holding trades over the weekend. If it was commodities and indices, I will definitely not hold the trades over the weekend, because we get such huge gaps. In the currencies, you don't get as big a gap as you get in the indices and commodities. Whenever we get high impact news being released over the weekend, like right now, Trump can just issue a statement that they've gotten into some sort of a peace deal over the weekend, and on Monday you'll see such a huge gap in the indices and commodities. And when you're on the wrong side of a gap on market open, you might end up taking a bigger loss than you had anticipated, even if you had a stop loss, because you won't be filled at your stop. You'll be taken out a few, maybe 3, even 4% below your stop level. So it's not ideal. Sometimes it's not ideal to hold trades over the weekend, but in this instance I'll look to see, because it's have the entries are in the currencies. Now I'm waiting to see if we can break this high so that I can move my stops to break even, and this trade can now run risk free. As I've said before, taking 2 trades on the USD means, although I've risked 1% separately, I have a total exposure of 2%. If the price action goes in the opposite direction to my prediction, then I'll probably end up taking 2% in losses, which is why it's always important to be wary of that correlation, and not just to think that because you've taken 2 different trades that you have 1% on the line for each trade. No, in this instance you have to think like that. You actually have 2% on the trade, on the line, in terms of risk. For now, let me wait and see if we can break this high. Yeah, The Art and Science of Technical Analysis by Adam Grimes. It's actually a book you can get for free right now. If you just search for it, you'll find a PDF version. For those joining us, I'm currently in on an AUD/USD long and a USD/CHF short. Now these are swing entries, and I might have to manage the trade and hold them over the weekend. If I don't take profits before market close today. I've not moved my stops on these particular trades. I'm still running with 1% risk on each trade. I've already broken the reasons for why I took this trade. You can bob, if you are joining right now, you can go back just a little and you'll see the reasons. But very simply, I was looking for reversals after this market that trended for quite a while, and we got the sides of a reversal with this descending nature at the top, at the bottom here, which is an indication that the buying pressure is getting exhausted, and we did get the exhaustion of this the selling pressure is getting exhausted, and we did get the reversal I was looking for with this very strong 3 candles. This is what I would call an impulsive move with 2 very strong candles. Now this is not a strong candle, but the confirmation candle, once I got this first impulsive candle, I was waiting for another strong bullish candle close. I did not get it with this candle, but I got it with this one. Now this was a confirmation that now I can take entries, because we might get a market that is about to start to trend. Now price has not continued to shoot up exactly, but we are now starting to get some push to the upside. I'm waiting to see if we can break this high so that I can move my stop to break even. This is USD CHF, the dollar against the Swiss franc. Now I normally say that price action on the dollar denominated pairs is going to be determined by price action on the DXY, which is the dollar index. So let me just look at the dollar index. You can see here with the dollar index, price had been pushing higher and higher, and we got this sort of a consolidation. Then we got this sort of a double top at the top here. We took out this high, then we got the sell off. So I was now waiting to see if I could get entries on the dollar denominated pairs based on this weakness in the dollar. So for USD CHF, I was looking to short the dollar, and on Audi USD, I was looking to long the Aussie dollar. The reason for going long in this instance is because Audi USD is the base currency. So since the US index is showing weakness, I'm looking for longs because the Aussie dollar is going to obviously perform better against a weak dollar, a weak US dollar. Have you been able to find the Art and Science of Technical Analysis book? In terms of how I learned how to trade, first of all, I started with baby pips. I started with baby pips, but that was way back in 2018, 2017 there. And then I just went through the school of pipsiology, just to get the basics. I think that is the best way to start. Don't need to start with a lot of pressure. Just when you're starting with from let's say a dummy level where you don't know anything, and every one of us starts from there. When you don't know anything at all, I'd suggest to just start with baby pips, because with baby pips you learn what is a candlestick, what is a how do you get to place trades, what is a long entry, how to choose a broker, such just simple things that you'll normally not get in our trading community. And then you'll also be exposed to different types of strategies, including what do I say? What is the word? Skipping my mind. Indicators. There are some people who trade using indicators, so you'll get an idea of how the different indicators work from baby pips. Now, after baby pips, I stopped even to trade for a while. I started focusing on crypto. That was the time we had ICOs in late 2017, early 2018. And then after that, I think it was in May, I got back to Forex trading now seriously back in 2020 during COVID. I joined a trading community at the time, but I didn't stay there for long, but I continued backtesting the principles that I'd learned. Then after a while, I changed strategies again, joined another community, stayed for maybe 1 month or two, but went on my own and just started backtesting. Now, I got to a point now I started combining the different lessons from the different communities that I'd been in. The first community, we used to focus mainly on pattern recognition. And then in the second community, we also had some sort of pattern recognition, but it was in a different sense, in the sense that we are looking now at the nature and the underlying price action behind the patterns. And so after some time, I backtested. I realized that the way the second community, the way they were explaining and executing their trades, it was not really sustainable. But the good thing is I had another experience with, I could combine the knowledge I had from that community with the previous community. And now I was able to formulate my own strategy over the last, let's say, 4 or 5 years. So I'm almost sure that I don't think there's anyone who trades the way I do, because I've combined two different ways of looking at the markets without complicating too many things. And right now my trading strategy is very simple, as you can see. Pure price action, just waiting for an imbalance in the buying and selling pressure, and taking trend continuation entries. Sorry. I don't think that anyone can make it in trading just by learning on their own. At some point, you have to get some guidance. Yeah, I mean, 6 years plus. You know, the thing is, people really underestimate how long it actually takes to figure trading out. Just learn the strategy first of all. Now, understanding the technical aspects of a trading strategy might not take you so long, but I think you'll need at least six months to 1 year just to, first of all, figure out the technical analysis part of the particular strategy you are using. And that will be if you're getting guidance from someone who's actually trading that way, a mentor to say, yeah. So if you have a good mentor, then you can learn within 1 year the technical analysis, but then you have to continuously execute the trades. You have to back test. It takes a lot of work that people often don't want to put. Normally see people nowadays just starting to trade today, and then the next week they're portraying that they are successful traders, which is just a lie. Now I hope this internet is not going to start to act up now. I'd really like to know from those who are joining, who are in the live, like, how long have you been trading? How long, if you are profitable, how long did it take you to finally figure things out? I would say that the last 2 years have been very challenging, especially on the swing strategy, because when I left my last community, what we were being told to trade at least the specific pairs we were being trading were like 6, and they were all currencies. I was trading Euro USD, GBP, Pound USD, AUD USD, Pound, Euro JPY, and AUD JPY. And over the last 2 years, the markets had been extremely slow on those particular currencies on that 1 hour swing strategy. Then I started now testing out other different pairs. That's when I started moving to maybe trading indices and commodities, gold, silver, NAS, the DAX. So, and then this year, after noticing that last year was quite slow, especially the last 6 months of last year, I started to think about if I could get some sort of an intraday strategy. But I did not want to switch strategies again. I could have been very easily tempted to switch to ICT concepts, but I decided to stick with my price action sort type of trading. So I just I started back testing my strategy, but on the 5-minute time frame, to see if I could get the same opportunities, the same entries I'm taking on the 1 hour, if I could get the same entries on the 5-minute chart. And it has been really good since I moved to the intraday. I'm being a lot more active in the market. And whenever, in case we are just getting a sideways movement or a correction or a range bound market in the 1 hour time frame, I do get to take advantage in the intraday strategy. Now, the intraday strategy I've been trading maybe for now 2 months. I would say two or 2.5. And I wanted to first get completely fine-tune the strategy before now I can start to use the strategy to pass prop firms. Right now I'm just executing the trades on my personal account, but we will definitely be doing the prop firms, and we are going to be doing them. We'll be going through the progress in the prop firms as I do the live streams, because most of the trades that I'll take on the prop evaluations, I'll be able to take them while doing the live stream. Let me see if we're broken. No, we're still in the consolidation area on the JPY pairs. Let me go down to the 5-minute chart, because I can see we're about to break outside of that consolidation on AUD JPY. Now we are testing this potential area of resistance here. And if we do get an impulsive push to the upside now, I'll be looking to see if we can get continuation entries to the upside as I'd anticipated. just broken outside of the consolidation, but it's about how impulsive you're going to get the break outside of this consolidation. If it's not impulsive with strong buying pressure, then I'm not going to get involved. You can see that the internet is back. The stream is now good. Still waiting for price to break this high so that we can move stops to break even. Now, as I've said, this is a trade that I may need to hold over the weekend. We're just going to wait and see how price is going to play out. If I'm not taken out for a loss on these trades, then I'll probably hold it over the weekend, and when I come back during the London session live stream on Monday, we'll be able to see how price played out and how I'm going to manage the trade. For now, it seems like price is going to hover around this entry area, just above my entry for quite a while. On USD CHF, I'm still in drawdown, and we might actually get tagged out, but let's just wait and see. I'm not sure if we're going to get the price action I'm looking for while doing this live stream. It seems the internet is really acting up. The stream seems to be going from excellent to poor back to excellent. I was planning on doing 1.5 hours of the London session live stream. We've been on now for 1 hour 20 minutes. You can see the Audi dollar, we just broke outside, just broke with a wick the top of that range, and we've gotten straight reaction, and we've now gotten back inside that range. So let's see if this selling pressure is going to continue and we break outside of this consolidation area impulsively to the downside. This is very similar price action. We're getting similar price action on all the N pairs. We are in some sort of a correction or a range, and I'll be waiting for price to break outside of the range. Anyway, for now, let me see if I've been tagged out of the USDCHF long and short entry that I had. Not yet. I'm still in the trade. And I'm just going to manage this trade once I'm done with the live stream. I don't have to sit and stare at the screen. I already have, the thing about this particular entry is I already took the trade. I had my predetermined stop, and I'm comfortable with the risk I have on this trade. It's a 1% risk. So once you've taken the trade and you have your stop, you don't have to sit there and stare at the screen hoping that price is going to play out in your direction. Once I end the stream, I'm going to actually even head out of the house for a while. Just be back. I'll just look at the charts at the close of the hourly candle. After every 1 hour, I'll be looking at the chart to see if there's an opportunity, if price has continued pushing lower, or if I've been taken out. If price continues to push lower, then I'll just manage the trade. First of all, it's about moving stops to break even, and then I start to lock in profits as price continues to push lower. And see, this is an ideal entry after a market that has been trending for quite a while. I normally talk about why for me it's important to buy when the prices are low and sell when the prices are high. And this particular entry fits that criteria perfectly, because you're getting a short entry after a market has trended for quite a while. Then you got this ascending nature at the top where the buyers were completely exhausted out of the market before we got very strong selling pressure, and I took my entry at the pullback. Now it's just about seeing how price is going to play out. Normally such trades like this, if I'm not taken out for a 1% loss, they could turn out to be monstrous trades with very, very high risk to reward. For now, it's just a game of patience. If you have any questions, leave them in the chat, and I'll be able to address them in real time. This week I took 2 trades on the intraday strategy, with both of them being losses, and then I've taken another 2 trades today on the swing strategy approach, and they are still in play. Currently, I'm in drawdown on this USD CHF trade, and on Audi USD, price is just above my entry level. Waiting for price to break this high before I can move my stops to break even and look if I can look for opportunities to lock in profits as price continues to push higher. I do not have any hard TP target set on both trades. I manage my trades very differently. Right now, I don't actively trade crypto. For me, crypto is mostly long-term. It's a long-term play. I do buy when any crypto that I hold, I'm planning to hold it for 10 years, 15 years. I think that's the best way to get involved with crypto. But you can trade crypto. It's just that I've not backtested properly enough. I've backtested a little on BTC USD, and I've even done a video on that. The only issue I had with trading crypto is that you get different price feeds depending on the different broker that you're trading. So I've not yet actually backtested the price feed from my broker, but my broker does offer a lot of crypto pairs, and it's something that I can look into trading in the future. But for now, I don't want to overwhelm myself too much with too many asset classes. The indices and commodities that I trade are perfectly fine and considering that I'm also trading around 8 currency pairs. But if I was to focus on trading crypto, then probably I'd trade ETH, Ethereum, and Bitcoin. But with crypto, it's more of a buy and hold approach. That is the ideal approach to crypto. Like you use Bitcoin like sort of a alternative to the normal banking system. I think everyone gets involved in crypto just purely based on the speculation. But if you can trade different asset classes, even including crypto, then your investment approach to cryptocurrency becomes a sort of a buy and hold approach. And you can also, if you're making enough money from actively trading, then Bitcoin is just like sort of an investment and an alternative to the normal financial system. Let's just say in another 10, 15, 20 years, we get into a situation where we have a crash in the financial system. Those who hold Bitcoin will be laughing all the way to the bank, and they'll be safe. So with Bitcoin and crypto, it's more of a to do my research, buy and hold. Do you trade crypto yourself? Right now, especially in the world of crypto, as I said yesterday, I'm starting to going back to doing my deep research. For the longest time, we had a talk about real world assets coming to crypto, and we are now getting that shift. And people, I think, real world assets are doing really well right now. So it's something I want to look at, do a little bit more research on before I can build my crypto portfolio. But I don't think you can ever go wrong with Bitcoin as long as you hold for over at least 5 years. If you buy Bitcoin today and you hold for over 5 years, there's a very high likely chance that you'll sell it at a higher price than at what you bought it at. But if you buy and are planning to sell within 6 months, you might end up on the wrong side of the market. Have I been tagged out of this trade? Not yet. Let me just confirm from my broker's end. Don't know why it's not working. Still in the trade, not tagged out. Now let me just have a quick look on the yen pairs to see if we're going to get any break outside of the consolidation within the next few minutes, to see if I'm going to stay in the live stream or if these trades will take a little bit more time to play out. As I said, now I'm only looking to trade the first 3 hours of the to take my entries within the first 3 hours of the New York session. Once we hit 3 p.m. London time, 4 p.m. London time, I'm no longer taking trades. That will be 6 p.m. Kenyan time. So let me just have a quick look at the yen pairs. These are trades I'm looking at on the intraday strategy, meaning the analysis will be done on the 5-minute chart. So we are still inside this range. With the Audi JPY, we're also still inside the range. And I'm waiting to see how price is going to break outside of this range, either to the upside or to the downside. In fact, for the GP pound yen, I'm not even looking to take any trades anymore on this particular pair. So I'll continue to monitor New Zealand yen, Audi yen, and Euro yen. Now, I'm thinking about launching a Discord community where I'll be posting the trades. Once I'm done with the live, we'll be able to catch up in the Discord community. And in case I do take trades after finishing the live stream, you'll be able to see the trades that I take. So for now, let me just have a quick look at the USD trade to see if I've been tagged out. Still in the trade. On ODSD, obviously, you are still in the trade. We are not yet we have not yet gotten to my entry area, slightly above. Now, I'm just going to give you a quick breakdown of how I'll manage the trades if they continue to push upwards. So now that we've had this first push, we've gotten the correction and I've taken my entry. As price continues to push higher, this is how I'll be moving my stop. So I'll be moving my stop to the previous low. So you get the first push, you get the pullback. This is where I took the entry. So once we break this high, which is here, which is this high, if we break this high and you get continuation of momentum, now I might move my stop to break even first of all. Then if we get the pullback and then we get continuation of momentum and we break the next high, then I'm going to move my stop to this previous low. Continuation of momentum, pullback, continue momentum. I'm continuing to move my stop higher and higher to lock in more profit, so that in case price does decide to reverse, then I'm taken out at this level over here instead of holding the trade and allowing price to go back all the way to your entry. Now some people manage differently. By taking small profits, minor profits as price continues to push higher. So you might find that once price hits 3 risk reward, someone might take maybe 50% of trade and they continue taking profits slowly. But for me, that's how I manage the trades. Hello, Teg. Yeah, gold right now is moving crazy. I haven't even looked at gold for the past how long. On the 1 hour time frame, I'd expect gold to continue pushing higher. The 5 minutes, you can see gold is sort of, price is just ranging between 42.46 and 41.70. Now the thing about this gold price action is that once we had this push to the upside, this impulsive push, and then we got an immediate pullback, strong selling pressure. This is a sort of V-shaped recovery that leads to messy price action like we're seeing right now. But on the 1 hour, it looks a little bit clear. This will be on the swing approach. But I've not even been able to get opportunities on gold, I think this past 2 months. Starting to get some push to the upside. But it's just the first 3 minutes of the 1 hour candle. Hopefully I'm still surviving on this other entry. Yeah. Which strategy do you use, Teg, to trade gold? So for those joining, I'm currently in on USD CHF short and on Audi and an Audi USD long. Now the correlation in these two pairs is so striking, very strong. So because they are both dollar denominated pairs, hopefully we can break this high and I can be able to move my stops to break even. Already taken 2 losses this week, so hopefully this can be a win. And as I've said, I might have to hold this trade over the weekend, but first of all, it's just about moving stops to break even so that this trade can run risk-free. So I'm still waiting for price to break this high, the high of this candle. Right now, price is running at about 1 risk to reward. We do not have any high impact news being released today. The only high impact news was at 7 a.m. on pound, and we've had a clear day throughout, unlike yesterday and on Wednesday. So I'm not worried about any news being released that might cause a spike in the price action, which is a good thing. It allows me to at least manage the trades in peace. Still in drawdown on the USD CHF trade. As I've said, I've really been waiting for such setups on the swing approach. And if this trade does play out as anticipated, then we might get a very good opportunity for a high risk reward. Let me just take a look at AUD/USD to see if we've broken the high. Not yet. Where you, if you're joining the live stream, where are you joining us from? We've been now live streaming for the past 1 hour 50 minutes. We have not gotten the entries opportunities I was looking for on the intraday strategy on the yen pairs, but I do have two entries on AUD/USD and USD/CHF. Though I've not been able to lock in any profits at the moment, still waiting for price to continue pushing higher on AUD/USD and waiting for price to push lower on USD/CHF, because on USD/CHF I've taken a short position, and on AUD/USD I've taken a long entry. This could very well end up being a monstrous trade, because when I look at the distance we have before we can get some meaningful resistance, this could be a really good trade, similar to USD/CHF. But first of all, we have to get the momentum I'm looking for, because with USD/CHF I'm still in drawdown. I was almost tagged out, but I'm still in the trade. Now the two entries on this particular two pairs, as I've said before, for those joining, are very correlated because of the dollar denominated, both are dollar denominated pairs. So price action on the dollar is going to greatly influence how these trades will play out. But I've made sure that I've risked 1% on each trade, so I have a maximum exposure of 2% on the dollar. It is very important to be aware of these correlations when you're trading pairs that have one common currency. So in case you are trading dollar denominated pairs, it's good to know that the price action on the dollar index is going to determine how price action is going to play out on all the pairs that are dollar denominated. For me, I like to have a maximum of 2% in terms of open risks at a time. So in case I've taken 2 trades already, that will be it for me in terms of taking other trades. But in this instance, I was looking to see if I could get intraday entries on the yen pairs, maybe just one, because these particular entries on the AUD/USD and USD/CHF are on the swing approach on the 1 hour time frame. But on the intraday strategy, I did not take any trades, so there was still an opportunity to squeeze in at least one entry. But we have not gotten the entry or the breakouts. The yen pairs are still in a consolidation or in a range. I was waiting for them to break outside of the range before I could look for trend continuation trades. All you need right now is a strong candle like this one. See this strong impulsive bearish candle? If you can get this one strong bearish candle, then we'll be able to break the low and probably prices price will start to continue to trending lower, and I'll be able first of all to move my stop to break even. We've been able to break the high on ODSD, not yet. Is there anyone who's closing the week on a profit? As I've said, I'm currently down 2% for the week, but I do have these 2 open entries that will end up being wins, or they could also end up being losses. But hopefully they'll end up being wins because, as I've said, they are very likely to be high risk to reward trades. It's now 3:17. Now we're in the last hour of being able to take trades on the intraday, so most likely than not, I'm not taking any other trade today because the JPY pairs are still in a consolidation. So I'd rather just wait and manage the 2 entries that I have right now. As I said, I normally stop trading at 4 p.m. London time or 6 p.m. Kenyan time. I might be tagged out of this DCHF seeing this price action. Not yet, still in the trade. We're now approaching 2 hours on the live stream, and I think I'll be ending the live stream in the next few minutes, unless you have any questions. As I said, these are trades that I'll probably have to manage over the next and hold over the next few hours. If I'm not tagged out and price continues to push in my direction, then this will be trades that I'll probably have to hold over the weekend. And when I'm back for the London session live stream on Monday, we'll be able to see how this particular trades played out. So unless you have any questions I'll be ending the stream in a few minutes. I'm still in this USD CHF trade, and I'm also in on this Audi USD trade, slightly just above my entry, and with the USD CHF I'm in drawdown, but not yet out of the trade. But then next week I'm back with the vlogs. I'll be mixing the vlogs and the live sessions, live trading sessions. This week, just to close off, so this week I've taken 4 trades in total, 2 trades on the intraday strategy and 2 trades on the swing approach. Now with the intraday strategy, the 2 trades that I took 1 trade I think on Monday or on Tuesday during the live stream, which was a trade on New Zealand JPY, which was a 1% loss, and then I took another trade yesterday on crude oil, which also happened to be a loss, another 1% loss. So as we speak, I'm currently sitting at negative 2% for the week. These still trades, these 2 trades or swing trades that I still have open, I cannot count them. We'll have to wait and see how they're going to play out. So for now, I'm down 2% for the week. We are maybe 1 pip away from being taken out on USD CHF. Let me see if I'm still in the trade from my broker. Yes, I'm still in the trade. Okay, now the internet is even acting up, but either way, I was about to end the live stream. I'll still manage these trades after finishing the live stream. But as I said, I don't have to sit and stare at the screen. I already have my stop loss. If I'm not tagged out and price continues to push low, I'll wait for price to break this low before I can start to manage the trade. Probably move it to break even first of all, then see if I can lock in some profits. Without the USD, I'm also waiting to see if I can break this high before I can move my stop to break even and then manage the trade as it continues to push higher. If I'm not tagged out of these trades and I end up holding the trades over the weekend, then on Monday during the live stream, I'll be able to go over the progress on these particular trades. But for now, I think that will be it for today's stream. I hope you have an amazing